I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. And it was another great day for the grain markets. We had corn finishing up about 4.25, November soybeans 5.5, and December Chicago wheat, the big winner of the day, up 15.5 cents. Crossing above that psychologically significant $6 handle, an area that we haven't seen this front month futures contract trade above since back in 2015. So you have to go back a few years to see that, but the momentum continues to pile on and the funds continue to load up on their positions. How much longer and how much more can they add? That's going to be the huge question going forward. There's a couple of these markets where they might be a little bit overextended. Soybeans specifically, we know Friday's commitment to traders report had them just shy of a record net long. By this point, we have assumed that they are a new record net long position, taking out the old record from 2012, which was July. And that's kind of how the markets are trading right now. It does feel like it's July and there's no rain in the forecast. It's very unusual to get a move like this in the grain market at this time of the year. So it certainly has piqued a lot of attention, not just from the agricultural side of things, but also traders outside in other sectors looking for momentum trades to pile on board, and that could be playing a role into some of the momentum we've seen here recently too. The technicals remain very much intact for corn, soybeans, and wheat. As we had mentioned here for quite a while, we're neutral bullish on the corn market, so basically cautiously optimistic. The technicals remain extremely friendly. You can see that we've been consistently marking higher highs and higher lows for the past couple of months since those lows back in August. Now, where is the top? Well, that's the million-dollar question. $4 is obviously psychologically significant. If we make our way up there, we wouldn't be surprised to see the market maybe stall out and some long liquidation ensue from those levels. Now, the support to keep the trend intact, the bulls really want to defend this 377 to 379.5 area. This is significant. This was previous support in the breakdown point back in March. It was resistance on the first test in September, kind of the breakout point in October. So that's the line in the sand for the bulls to remain in control. A break and close below that would neutralize our bias and potentially trigger additional long liquidation pressure. RSI at 71 is a little bit overbought, but not to extreme levels. I think a lot of this price action here going forward is going to be pending on Friday's USDA report, so be paying close attention to that as traders await that new news. And speaking of the USDA report, we do these call to close competitions, where if you can call to close in corn, we send you this free mug, Call to Close Champion. We also added a soybean one too, so be checking your emails Thursday afternoon and Friday morning to submit your guesses and chance to win a one-of-a-kind trophy on that end. Let's kind of move forward to soybeans here. Soybeans, I think, have been the ones that we've been getting probably the most questions about with regards to, well, how far can this thing run? Well, we're in uncharted territory, and we've noted this in our reports. You get to uncharted territory, finding resistance honestly becomes a fool's errand, and it's like kind of pin the tail on the donkey. When we look at technical levels, we kind of use it as a roadmap of the historical price action and interaction between buyers and sellers. Well, we don't have that here because we are at new contract highs. So we always say the tops and bottoms are a process, not necessarily a point. I feel like we are getting to a point where we could start to see that process take place, but we're going to need to see some more confirmation of that. There's nothing to indicate that this run is over just yet. And as mentioned with the corn market, we've been consistently marking higher lows and higher highs for the past several months. So that keeps the bull trend intact. Really, $10 is going to be the big area to keep an eye on going forward. Breaking close below that would neutralize our bias over the intermediate term. Honestly, though, I wouldn't be surprised to see us chop around in a 50-cent wide range here in the next several weeks. I think there's going to be a lot of opportunities for traders on both sides of this market going forward. Now, wrapping things up with the wheat market, as we touched on, taking out that $6 mark, which is psychologically significant, and up towards this 610 area. Now, there was some higher trade if you go all the way back here to 2018. I kind of take that with a grain of salt because there wasn't a whole lot of volume for this specific contract. So we're basically making new highs, which again, as with the soybean market, puts us in uncharted territory. 599 to 603.5 is going to be the barrier now that the bulls want to defend. If the bulls can't defend that and we break and close back below $6 this week, I wouldn't be surprised to see that lead to a little bit of long liquidation, but the bulls remain intact. This has been one of the prettiest charts. It's an inverted headed shoulder. So here's the shoulder, head, shoulder, higher highs, higher lows, higher highs, higher lows, higher highs. So we could get a pullback, theoretically to 570 and still keep the bull trend intact. Ultimately, I want to be an aggressive seller in this wheat market, but as mentioned with soybeans, the top is a process, not necessarily a point. So we're keeping a close eye on the developments here going forward, but eventually would like to be aggressive seller. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures from the CME. Remember, futures trading and options involves substantial risk of loss and is not suitable for all investors. Thanks a lot.